up 18% year on year from April to June, and steady capital spending expected in 2026. Well, let's get more from Austin Lyons, Senior Analyst at Creative Strategies. Austin, good to get your thoughts. Let's start with Microsoft then. Their CapEx starting to translate into returns on investment.
Yes, Microsoft, as you mentioned, they're a software company. They also have Azure, which is a cloud, and investors feel confident in Azure's ability to rent out the GPUs that Microsoft is investing heavily in. So Azure growth was 43% year over year this year. Investors were happy about that. And at the end of the day, Microsoft's investing in lots of GPUs, but they're able to get a return on investment quickly by renting them out. And then also on top of it, they are with Microsoft Copilot exposing the AI that runs on those GPUs to enterprise customers. And again, that's a pretty quick turnaround, and you can have good margins on the AI and pretty decent margins on Azure renting out the GPUs, and your time to return is pretty quick.
Yeah, and what about Meta then? They're not seeing such quick returns so soon, and that's weighing on investors given the CapEx spend that they're talking about.
Yes, you nailed it. So both companies are spending heavily. Microsoft is able to see a kind of quick return on it. Meta, on the other hand, Meta is ultimately an advertising business. And so the investment that they're getting in GPUs helps monetize their ads better. But a lot of it is very forward-looking, future-looking. And so it's going to take a while for Meta to figure out how to turn those GPUs and the AI into better ads, new ad experiences, new ad surfaces, and so on. And so, of course, investors are essentially punishing them and feeling a little concerned. There's many other reasons investors are concerned. Meta, their free cash flow went from about $12 billion last quarter all the way down to under $1 billion this quarter, which means they're spending a lot of their cash to invest in CapEx. And as you said in the intro, they're nudging up their CapEx investments. And so you've got Microsoft, investors are feeling pretty confident. Meta investors are concerned that maybe that money is not going to turn around and return so quickly.
Yeah, and with Meta, they've also dropped hints that they might rent out any extra AI computing power. Is that something that could work in their favor? But I suppose that needs to actually physically happen, doesn't it?
Exactly. Zuckerberg has talked about it for the last 3 quarters, and they would make money here. You've seen Elon Musk do this with extra capacity, but it's a tough internal decision. It means, Mark Zuckerberg has to decide, where are those GPUs coming from? You're going to have to take them from someone internally so that you can rent it out. I think it would be a shrewd business move, a way to recoup some money and also just convince investors like, hey, we're thinking about the ROI here. But we haven't seen it actually be done yet by Meta.
Austin, good to get your thoughts as always. Austin Lyons, Senior Analyst at Creative Strategies.